Welcome everyone to this week's Meetup call. We've been holding these on Tuesdays at 9 a.m. Eastern, 1 p.m. UTC for about the last month. This week, I have some updates to go over regarding the documentation, some updates I've made there, added a little bit more transparency, just some updates in the app reflecting new deployments across chains and one new listing. And then from Hugh, we'll hear his weekly core team update. He'll also be doing a little bit more of a detailed review of the work that the tokenomics working group is doing. I'll do a review of the last week in cover sales, active coverage by cover type, and then I'll go over some community updates. So I will get things started and just do a little general review of the updates to the Nexus Mutual documentation. I made a few different updates this week worth noting, and I just wanted to go over. One in the Nexus Financials section, I have updated the info about the Maple investment allocation and the enzyme integration. I have a breakdown very similar to what I included for the Lido allocation and the increased allocation there, just detailing the process. I also included some resources under where you can review like the Lido rewards earned to date with the Lido calculator. I have the link to our enzyme vault there, so anybody can go in and review the earnings to date. They can look at our Nexus Mutual Treasury Yield token holdings, and they can review all the information right through that enzyme vault link. That's there for anybody who wants to track that and look at how things are managed over time. That's just another level of transparency for us to offer in the docs. So I also went through and updated a couple other things. So one of the other votes that went through on Snapshot was replacing Krugman, one of our former signers, with myself as a Nexus Treasury multi-sig signer. I've updated my information in the Nexus Treasury multi-sig section. And then I've also built out a section for the Nexus Hub multi-sigs. So these are the addresses where, when funds are approved for operating budgets for 6-month periods, for Nexus Investment, Nexus Communications, and any other future hubs as they spin up, they'll have a Gnosis safe. They'll manage payment for their contributors. They'll manage operational expenses. And all of that can be viewed in these Gnosis safes. I have the information there. I also have the signers for each according to the snapshot voting. So you can look at that in addition to looking at the Nexus Treasury address, looking at the holdings there, and you can look at the holdings in these multi-sigs as well. As time goes on, we'll include more resources here when new hubs are added. Once I have a little bit more of a cohesive information on how we use Utopia, I can add that in here as well. That's been a really big help on our side for managing things at the DAO level. Utopia's been really great, so I'll add more information as time goes on there as well. I'm also working on updating the claims history section in the docs. So specifically, it's the Excel file where I've summarized the discussions around claims. So 2021 claims have been here and complete for quite a while, but I've gone through the 2022 claims to date. I've summarized all of those based on discussions on Discord and the proof of loss provided. And now I'm starting to go through the 2020 claims and summarizing those. Those will take me a little bit longer because I have to go, way back in time in Discord and summarize some of those conversations and add that information over there. But all of this is in here, so if you want a quick summary, you can look in the dApp, you can look in the Nexus Tracker, but for some context for the situations regarding all of these claims, you can go right in the docs and look at the claims history here. I should have this done by the end of week, but this is just an easier way to review past claims, the outcomes, and kind of get a general understanding of why they were approved, why they were denied, and whether or not there was a loss event around that time. There's also some updates in the dApp. So on a regular basis, we update for new chain deployments. I've gone through and noted for our engineering team the new deployments for the different protocols. This is just a sample of some of the dApps listed in our dApp that are covered. And as time goes on, I'll keep that updated. If you know of a deployment for a protocol that is not reflected in our UI, just go ahead and reach out to me in general or the marketing general channel and tag me and let me know, and I can get that over to our engineering team and they can update that in the dApp. We also have a new listing this week. We've listed Euler. Euler Finance is a really interesting protocol. If you haven't seen it before, they have a lot of tooling. One of the things that I've seen from them is their twop manipulation calculator. That's really, really cool. But Euler is a permissionless lending market, but they have a lot of controls on how assets are added and then if they can be borrowed against, if they can be used as collateral. So it is very much a risk-adjusted lending market where people can add different kinds of collateral. So this has been added. If you'd like to look at resources for Euler, if you're interested in staking against as a risk assessor, I can put some of those resources in the staking channel as well. But you can go ahead and check out Euler when you have a chance. And again, if there's anything that we're missing in terms of deployments for protocols in the dApp, tag me in one of the channels and let me know. I also wanted to mention that I talked about the Nexus tracker last week and the deployment to Maple Finance. Since we're using Chainlink Proof of Reserve to track the price per share of the Nexus Mutual Treasury Yield tokens that are held in the capital pool that reflect the balance in our Enzyme vault, that amount of ETH wasn't reflected on the tracker. That's since been updated, so I have a link in the thread for today's call. If you look on the Nexus tracker now under the capital pool section, you'll see that the full balance of assets in the capital pool is there. Now that Dune dashboard has been updated to include the data coming from Chainlink's proof of reserve price feed, so that now the capital pool is complete. So those are just some of the updates I wanted to go over. You can find links to all those resources in the thread for today's call. But I will move on and hand things over to Hugh to provide his weekly core team update. Hugh?
Cool, thank you. Yeah, so I guess I wanted to spend the majority of the my update just going through the tokenomics stuff because I've got a bit of detail to run through there. But firstly, just on I guess quickly on other items. I guess the main focus of the team is on V2 and on the engineering side, and yeah, things are going well there. We're just progressing through the UI and also the testing. We'll give more updates when we have dates and all the rest of it. I guess the other big things that the team's been working on, there's lots of discussions on potential syndicates with V2. So we're having discussions with other projects, with risk people who understand risk and assess smart contract risk in particular within the space. There are also some early stage discussions. I'm sure it'll take a while, but on with like real world stuff and risks outside of crypto that are progressing, and people seem to be really liking the structures and stuff and the flexibility that's going to come with V2. So there's lots of really good progress happening on that side. Again, those types of things will take a while, and obviously we need to launch V2 first for anything to go really live. But there's lots of really promising stuff in the pipeline on that side of things. Yeah, so I guess I'll keep that side of the update kind of short and sweet. On to the tokenomics side of things. So what I'm going to do here is kind of run through where the tokenomics project has kind of come from, what its objectives and all that type of thing, and where it's currently at, and what a kind of plan for next steps. So Ray, he's kind of leading the tokenomics working group. He's an advisory board member, and there are several other people involved as well behind the scenes. I see Ray's joined here, so he can jump in if I'm missing anything. So, in terms of the kind of I guess overview, what we're trying to achieve here, the mission is basically to address the shortcomings of the current Nexus Mutual token model and how it operates. Specifically, we want to improve liquidity and enable withdrawals below the 100% MCR threshold. But we also want to keep the protocols safe and be able to pay claims even in the very extreme scenarios. And we obviously want to align the interests between all the different types of members. So from a kind of, I guess, more practical perspective, we want to make sure that we do this thoroughly and considered. We model it out, we test it and review it quite heavily, and it needs to be very, from a design point of view, it needs to be very gas efficient and like fully implementable on chain. So that's definitely a pretty big design constraint, and I'll kind of go into a few aspects that we've had to make. Well, we're working through at the moment basically, but we do run up against that design constraint. The community obviously needs to have appropriate feedback and input onto it, and the mechanisms for post-implementation review and iterations is required. So we're not kind of necessarily expecting it to be absolutely perfect once you release it. You may have to tweak parameters or adjust some things in the future afterwards. So that's kind of the overall stuff. In terms of the stakeholders, it basically affects everyone in the Nexus ecosystem, from smaller token holders to larger token holders to the cover buyers, but also people like the, I guess, more active users of the mutual. So like the syndicate operators and participants or staking participants. But we're also considering how this would work under V2. That is a primary consideration. And so these would be like distributors or brokers, underwriters, and stakers, etc. And of course, we've also got the claims. So in terms of high level project roadmap and stuff and where we're at, we've kind of broken this into three main stages. We're in stage 1 currently. And so stage 1 is basically like initial modeling and kind of research about potential mechanism designs that we could come up with, do some simulation models, which Ray has been pulling together, and then do some kind of internal review and iterations and with a bunch of people that have opted into the working group and kind of they're, I guess, more specialists in the ecosystem. And so the idea is to kind of come up with a potential proposal or a couple, and then move to stage 2, which is all about community review and further iterations, and then update the modeling as we go along, and then kind of work towards getting a final kind of I guess specification in place. And then the stage 3 will be actually kind of building it in the governance processes to actually implement. So that's kind of the high level stuff there. I might just pause for a second. If anyone has any questions on that so far, or if Ray, you wanted to jump in with anything.
Sorry, it's push to talk, isn't it?
Yep, yeah. Can you hear?
Could you guys could hear me now? Great. Just wanted to say, if I won't add any more detail. I think you went over the kind of overview points of the project pretty well. Just to say, I'm kind of trying to project manage it, so anyone who wants to get involved or talk to me about anything, just drop me a line and ask questions, make comments at any time during the process. My DMs are open and happy to chat to people.
Cool, thanks. So yeah, I think on the and then kind of getting into a little bit more detail to kind of give a bit of a flavour of kind of what we've looked at so far and where we're kind of at. But in terms of what we want to have in terms of requirements, we want to make sure we've got long-term participation. So we want to incentivize people to keep the capital in the mutual for long periods of time. We want people to be able to withdraw the capital from the mutual every time people withdraw capital from the mutual, our capacity reduces and affects existing covers, etc. So and reduces our ability to provide new products. So we want to keep that capital for as possible, noting that obviously we do want to allow people to exit as well. So we want the mutual to be able to grow and attract new capital, so that we can offer more cover and expand capacity. And I guess the other big aspect is safety. We want to make sure the mutual should be able to pay all its claims, even in extreme scenarios. So, the kind of key one here is if some big claims come in, you don't want all the capital exit being able to pay those claims. And of course, we need to be able to have it technically achievable and robust. It has to be gas efficient. It has to work on chain, as much on chain as possible. Obviously, fully on chain is the absolute goal. As we will get into a bit later, but it may be that it might be a few iterations to get that fully happening. The other point is, I guess in category 2, we've got these are the kind of member benefits, and so we want to make sure that exit liquidity. So members need to have exit liquidity in some reasonable time frame. Users who no longer wish to participate in the mutual should have the ability to leave without having to sell significantly below the book value of the tokens. And the kind of, I guess another key one is that any value that the mutual does kind of benefit from, so surplus, I guess. So, premiums less, cover costs, not premiums, cover costs less claims, plus any investment earnings that should accrue to the holders of NXM, and especially those who actively participate. And I guess a couple of key things that we want to avoid are any kind of extractive arbitrage. So the mechanisms for entry and exit should not be gameable. So you shouldn't be able to extract value from the system without contributing anything. And we want to make sure there's no misalignment of interest. There should not be any type of value-adding member that becomes disadvantaged as a result of implementing the new tokenomic design. And I guess quite importantly, the wrapped NXM gap. The wrapped NXM price should theoretically not be significantly below book value for any material period of time. And so we should have mechanisms that kind of allow users to benefit from this should any discrepancy be there, and the mutual should actually benefit, or the remaining members should benefit. And I guess we shouldn't really be diluting existing members. So I guess one thing that's interesting point, which we've kind of come up with, which is a bit different to how it operates at the moment, is that the mutual should not sell new tokens to members below the book value, and it shouldn't buy tokens from members above book value, as that kind of both of those are dilutive. So that's kind of one of the key tenets that we're kind of working with. And so if you do disagree with that, then please say so. And also one of the things is we don't want to allow or encourage a race for the exit. In case where most of the capital wants to exit, there shouldn't be a condition where those exiting early get significant. And this might happen here if you have some large claims come in. So those are kind of the objectives and what we're working with. We've been discussing quite a few different designs. I won't kind of go through the full history of stuff, but there's been quite a few that we've having a look at, and we're circling around a few things. But I'll kind of explain. Hopefully, I'll try and explain it. Probably would help with some slides a bit later, but I'll try and explain the kind of mechanism we're looking at the moment, and just to give you a flavour, I guess. So, for kind of the buying and selling, we want to remove the formula-based bonding curve system price, and we also want to remove the sell lock below 100% MCR. And the way we're planning to do that is we want to kind of implement what we're calling virtual Uniswap V2 type NXM/ETH pools. So they won't be like pools running on Uniswap, but they'll use the same kind of XYK formula, and they'll operate virtually within the Nexus system. So the idea there is that for selling NXM from to the mutual, the liquidity in ETH is set by governance or some system parameters. So we're still kind of fine tuning the best options there. So just think of it as, I guess, a parameter. We sell some amount of ETH, and there's a ceiling at book value, which kind of goes back to one of the points before. But the price starts below the current wrapped NXM price and slowly ticks up to book value by decreasing the amount of NXM in the virtual. And so each time you take NXM out of the virtual pool, the price ratchets up slowly. And then when someone actually sells their NXM for ETH, then the price drops back down as per the Uni V2 model, so XYK. So that determines how far the price shifts. So the price would shift back down, and then NXM is added back to the virtual pool, and ETH's removed in that process, and then it would kind of continue again, and it would slowly tick back up to book value until other people bid it down. And so the view here is that Wrapped NXM price should, in theory, tick up to book value very slowly over time, kind of with a bit of a ratchet mechanism, as essentially the traders would kind of, I guess, arbitrage between Wrapped NXM and this virtual pool. And so I guess there is a bit of a race condition there. So this is, I guess, what's one thing to consider. This type of model does kind of favor bots in some respect, to kind of eke out those small arbitrages and push the price up. So on the other side of this, so that's the kind of sell side if you have an XM and you want to get ETH out of the mutual. The other side here is if you want to contribute ETH to the mutual and buy an XM. And so I guess we're a bit less certain that the virtual pool is the answer here, but we are leaning towards that way as we actually do need, as we think the other options which require kind of oracles don't have this. We want to make sure we have a internal oracle system, and this V2 Uni V2 virtual pool actually allows us to do that. And the other alternatives aren't as great as we would like, so we're kind of heavily exploring this route. And so when you're talking about buying NXM from the mutual, there would be a floor at book value. So the mutual would never sell NXM like at below. Sorry, I may have said that around the wrong way. I'm getting a bit confused with which way it is. So yeah, basically it wouldn't give a higher price for NXM than the book value, and the way we would do this is in a similar fashion, but you would slowly increase the supply of NXM in the virtual pool over time, and that would essentially do a similar mechanism where it finds the price, and when someone buys NXM, so they contribute ETH to the mutual and buy NXM, the price of NXM would increase. And so there's definitely parameters here about how much liquidity and how much movement a certain buy volume actually shifts things. So those are the kind of key parameters that you want to kind of play with. And the more sensitive you make it, the less capital the mutual will capture on an NXM price upswing, but also the less dampening effect the mutual would effectively have on that NXM. And the conversely, if you have a very insensitive, the mutual will capture a lot of value on a price upswing, but would need a bigger price to move the NXM further. So there's those kind of balancing mechanisms to think about. And so once we have this type of model, we can effectively create an internal TWAP, so time-weighted average price of NXM, and that way the system has an internal NXM price that it can use for staking rewards, capacity, claims assessment, all that type of stuff. It's that value to work. And so that's actually quite a neat and relatively simple model that could actually achieve a lot of our aims. There's definitely some trade-offs in there, but that's one model we're kind of exploring quite heavily. There's two kind of main points that we want to get into a bit more, and see if we can address them. So one scenario is where we've had a few claims say we need more capital mutual to get it back up to a better, I guess, solvency margin. If you term it in insurance terms, like we need a bit more capital to be confident we've got enough to pay our claims. And so one option is that you could offer an XM price discounts as currently, but we're also considering instead bonus staking rewards for lockup periods. So if the mutual does need more capital, staking lockup and kind of like a VE token in some ways. And that way we could attract longer term capital rather than shorter capital. Look, just take advantage of some short term short-term capital need. We would want to attract long capital to the mutual. So that's one thing we're looking at. Their thinking is definitely not as advanced as the stuff I went through before, but there's some work to do on that one. And the other aspect that we're working through that is definitely a little more challenging on the technical side of things is the MCR. So one of the things that you do want to do here is, if you're allowing cells below the current MCR value, what you want to make sure is you don't sell too much of that. You don't let too much of the capital exit, because then you have to have enough to pay claims. And so how do you set that level? And so we do actually need to know what MCR concept is. Like, how much do we need to set aside to pay claims? And the more we need, the less liquidity you provide in that virtual V2 Uniswap pool, effectively selling by 100% MCR. And the less you need to pay, less you need to set aside to pay claims, the more liquidity you can. And so there should be some link between cover purchases and the liquidity in that virtual uni to allow people to exit the NXM for ETH. So one of the biggest challenges here is under V2, just because of gas and how the EVM works, etc. It's actually technically quite challenging to work out total active cover amount to feed into the MCR to work that out. So we're looking at other potential metrics that we can use to kind of assess the overall risk exposures, and working out what the best kind of trade-off solutions are. And so we need to, it may be the case that we do something quite simple to start with that's not very dynamic, and then come back in a later to address that. But we're not sure right now to go through on that one. But at the moment, we're kind of focused virtual Uniswap pool idea, and looking at the ways it works from an incentive alignment and modeling perspective. So that's basically where we're focused. That was long and well, yes, quite a bit of a rant maybe. But Ray, did you want to jump in with anything there? Any other perspectives? And yeah, obviously happy to take questions as well. But Ray, did I miss anything?
Don't think so. Seems like a pretty good overview of where we're at and what we're trying to do. Again, so I'm building the simulation models in Python, and it's currently a bit of a solo effort when it comes to that. So if anyone is interested in contributing to that side in any way, then just let me know and we can have a chat about it. But yeah, other than that, just I'm hacking at it and trying to figure out not just the design but the parameters and see where that gets us. As you said, I know we haven't. There's a lot of people talk about WNXM price gap, etc. But I guess what we didn't really want to do was just say, hey, can someone figure out tokenomics, and then just get 20 different voices trying to push their own idea. It would just be chaos. So we want to make sure that we get it right to an extent where we have considered a lot of different options, and when we put something forward to the community, that it's well thought out and considered in quite a lot of detail. Yeah, I think that's. But yeah, thanks Hugh for giving the overview of where we're at.
Yeah, cool. So so basically there's a lot of work going on there. There's quite a lot of detail to work through. But yeah, we're always open for any questions and comments on it as we go along. And when we get to the next stage, hopefully there'll be a bit more the idea is we present a bit more tangible stuff so that you can, the community can essentially debate and talk about the trade-offs of the potential solutions. Yeah, so cool. Hopefully that is helpful. Happy to take questions on it. Otherwise, I'll hand it back over to you, Lee.
Yeah, thank you to both Hugh and Ray. I think my only comment is within Discord, we can create a tokenomics working group channel or something, but if there is a channel that would be the best place to reach Ray at to talk about this, if anyone is interested. Ray, if you can just let me know, and I can definitely make a channel for you or some kind of forum, and then we can direct people there if they have comments or if they're interested in contributing, just to kind of streamline that process as well. But I can talk about that with you later, Ray, and then I can include that in the newsletter for this week.
Yes, that sounds good. I think that's yeah. Let's chat about it later to get the detail down on that. But yeah, seems like a good idea.
Okay, that sounds great. Well, thank you both. I mean, that was great. Really exciting progress on tokenomics, and it is definitely something hard to get right. And with a small amount of contributors, it keeps things quiet, but it's also a lot of work and a lot of different situations to consider. But I will jump into the last week in cover sales. You can find all of this data on the Nexus tracker. This week, I think this is the lowest cover sales I've seen since I started, but relative inactivity on chain and lower yields across the board. So we sold a little bit more than roughly 162,000 in cover sold, and we earned about $600 in premiums. The split between DAI and ETH is roughly 35 and 65, with the majority being in ETH, and then for premiums earned, about 20% premiums earned in DAI and about 80% earned in ETH. I'll go over active coverage by cover type. This week, I'm trying something a little bit different instead of going through each individual graph. I'll have those graphs in the newsletter, but I just have a graph that shows total active cover by cover type, with the total amount in dollar terms. So total active cover is 132,622.03 ETH, or roughly 196 million. This was as of yesterday. There is about 152.1 million in active cover for protocol cover, 32.6 million in active cover for custody cover, a little bit more than 8 million for ETH2 staking cover, and about 3.2 million active cover for yield token cover. You can find all of this info on Nexus Tracker. The exposure across the different platforms for protocol cover, custody cover, ETH2 staking cover, and yield token cover is comparable to last week, but the full information with the typical graphs I've included previously will be in the newsletter for this week. But if anybody would like me to share those in the thread for today's call, I'm happy to do that as well. And then I have some community updates to go over, so just a few this week. One is I just wanted to run through some updates on the Nexus Communications side. I know things on our side have been relatively quiet, but there are several projects that we are working through and managing, and some different resources that I'm working on developing. Some of the big ones are the Nexus V2 documentation. So I'm working on the design and starting to write the user documentation for V2. I'm also going through and making some Nexus Mutual DAO resources that we plan to host on Notion. So just writing out some of that content. I'm managing a technical writing project. We have hired someone to write out the technical documentation for the Nexus V2 code base that is coming along. We're working with the engineering team on some of that, and that's just going through comment and review at the moment. We're also working on a website refresh, which is one of the priorities listed in on the forum ahead of our snapshot vote, which was approved around the beginning of August. So refreshing the current nexusmutual.io website, adding some more resources, of course, making it Nexus V2 centric, including information there that's accessible, having some of our metrics included on the site, all of that is coming along as well. So we're making very good progress on the website. Once I have more information on that, I can share that as well. And then with the user documentation and the technical documentation that we're working on, once those are finalized, I can start working on syndicate resources and delegation resources for members, since those two are somewhat related. So a lot of writing work on my end. I'll also continue to share updates in Discord and in our newsletter and across our other social channels, and I'll update the existing documentation on Gitbook as well as time goes on. So I'll try to make sure that's updated. And if anybody sees anything in there that needs to be updated, just send me a message in Discord. Happy to update. And then in terms of marketing strategy and the launch plan, I'm working with Claudio, who is our growth and strategy lead. So Claudio is working through an audit of our social and communication channels to determine a long-term strategy. So going through and seeing where we're seeing success, where we can see some improvement, and how to best reach and build an audience across our different channels. As we lead up into V2, this is going to be really important because it'll inform some of the strategic decisions that we make and where we allocate certain resources to build out audiences on some underutilized channels that we have now. I'm also working with some contractors on a branding refresh project and some updated visuals. I'm working with one group of contractors on some videos for Nexus V2 when it launches, and then just an overall refresh for the website, for some of our other branding assets, just to kind of give us a new look and feel as we head into V2, but we'll share more information on that as that progresses as well. And then I'm collaborating with the core team and the DAO contributors on the Nexus V2 launch plan. So when I have an update on when the Nexus V2 is planned to be launched, I will let everybody know. But in the interim, I'm planning out the best way to announce V2, to get the word out there and to educate people about the really great infrastructure that we're building out that allows other people to contribute to the mutual and to build on top of the mutual if they have risk and pricing expertise. It'll also make a lot of things easier for existing members, like delegating your stake to risk experts when you want to earn on your NXM, but maybe you don't have the technical expertise to assess risk yourself. And then for cover buyers, there's a lot of benefits coming as well. So these are the main things that I'm working on, that we're working on with the Nexus Communications. As things develop, I'll give periodic updates in these meetup calls and in our newsletter as well. But if anybody has any questions, feel free to reach out to me in Discord in the Marketing General channel. I also wanted to say that some of the Nexus Mutual team is going to be in Berlin for Berlin Blockchain Week. So I will be in Berlin, and so will Kaylee. So we're both going to be there attending various events happening during the Berlin Blockchain Week. I'm planning on attending dApp Con. If I have time, I plan to stop by DuneCon, which will be really great. And there's a couple other things that are happening as well. So there is a conference that's looking at how DAOs work and ways that you can navigate certain things or improve certain things. So this is something that I'm looking to attend. And then, of course, ETH Berlin is happening that weekend, the weekend of the 16th. So I'm planning on attending some of the events related to ETH Berlin as well. So if anyone is going to be in Berlin for Berlin Blockchain Week and wants to meet up, reach out to me on Discord or Twitter. I'm definitely happy to meet any mutants that are going to be in Berlin for the conferences happening that week. And then I wanted to touch on this governance conversation. So we've talked about this in previous weeks. At this point, we've had discussion on the forum about what to do with the ETH proof of work that we received. So when the merge does happen, it's very likely that there's going to be a proof of work hard fork. And this means that the ETH that we have in the capital pool will be replicated in this hard fork. We've talked about the different considerations. Those are also included on the forum. We've gone through a snapshot vote to determine if there is support for doing this. And at this point, there is one more snapshot vote left to determine the choices that members have discussed on the forum. So I have this comment from Hugh where he's outlined just a summary of these options, which is what's presented on the forum. And it's essentially one option is to allocate 50% to DAI for the capital pool, just to better match assets and liabilities, and then 50% to buy back WNXM for the Nexus Treasury. And the second option is just to allocate 100% to WNXM for the Nexus Treasury. As Hugh's pointed out, there's definitely some considerations we can make as well. But at this point, the next steps are a snapshot vote to determine the choice, because an on-chain vote is a yes or no vote. So of these two choices, you'll be able to vote on this on Snapshot, and I will work with GoTA to include any information in the Snapshot votes that needs to be there as well. But once that passes through Snapshot, depending on what the outcome is, then we can look to proceed to an on-chain vote for yes or no approval. And then once that's in place, if members vote to approve, then we will be set and can explore options for the hard fork and try to capture some value. And if members vote no and don't approve this, then this will be the end of that conversation. So look out for information on that snapshot vote. I imagine that'll be set up this week. I will coordinate with GoTA, and I will make an announcement and probably include that in the newsletter if it is ready in time. So any questions on this or anything else that we've covered so far? Okay. If not, I will move on to the open forum section. So if there's anything that I didn't cover, or if anybody has any questions, feel free to ask those now or bring up anything. The floor is yours if you want to talk in voice, or you can leave a comment in the community calls channel in text if you'd rather not speak or are having a hard time with your mic. Okay, I take that silence as a no. All right, since there are no comments, we can wrap things up for today. So thank you everyone for joining us. A lot of great updates in today's call. I'll summarize these and include these in the newsletter, which will go out Wednesday morning. Always appreciate everybody joining and listening to our updates. Any announcements that we have this week, we'll share. I'll have the recording up in the community calls channel on Wednesday as well. But until then, I hope everybody has a great rest of their day and a wonderful rest of their week. And we will see you on the call next week.